What up, everybody? Welcome to another watch list for the week of September 9th. But here's the thing. Yeah, I know what these watch lists is not just about, hey, I think NASDAQ is going here. I think S&P is going here. Like, nah, it's teaching through the price action, teaching through current charts. And so before we get to what the charts currently look like, let's talk about the charts look like this past Friday and say, how could you have attacked the market on Friday? What are some takeaways we could get from Friday's price action that could help us trade better for this upcoming Monday? So with that being said, let's look at the NASDAQ and kind of go from the top down. I wanted to start y'all a little more broad picture because that's what we do when we trade anyways. We don't just hop on the chart and just head straight to the 15-second time frame and start taking trades. Like never. It's always starting from the top down. So you know we coming from the monthly. So let me take you to the monthly time frame. Hit on Nas. So man, my mentees, they get me on an everyday basis, so I'm able to give them updates all the time. But you guys, I see out on Sundays, and if you're in the free community, I'm able to give you updates, but definitely not as frequently as I could give my mentees. I got two groups of mentees I got to cater to. But all since before September started, once I seen the wick that August left, you see this long green wick right here. I was like, yo, understand that that's what we call an inefficiency. That's an imbalance. The market doesn't like to leave that just in price action, just untouched. Usually we're going to want to address that. So that's why, as I said on previous watch lists, this rally that was occurring right here on the NASDAQ, I didn't really believe in it too much. I was like, listen, what I think is going to happen is, if you guys remember my true exact analysis, I wanted us to come into here before dropping off, but I did not think Nasdaq was going to run all-time highs this time. I know we've been in such a strong bull market, and every time any dip has been getting bought up. And then I was like, yo, this time I think we're not going to run all-time highs. I think something is in the water. But I just wanted us to come to this purple before dropping off. Cool. Then at that point, I also was watching this. I said, if we don't use this fair value gap to actually go higher, really wanted to go higher and said, look, this is what I wanted to happen, basically. I wanted that to happen. And then I wanted us to reject that and go like that. This was what I was calling for to happen. Instead, we consolidated here for a while and then we just dropped off anyways. But the thought process is the same. Basically, I was expecting what we call a failure swing. What do I mean by a failure swing? What I mean is we had a push up in the market that failed to take the previous highs. So we failed. This swing up was a failure. So that's what I mean. We had a failure swing before pushing down right now. All right. So once again, why was I anticipating a failure swing? Let me actually go into that a little bit deeper. It wasn't just about looking at the monthly wick and saying, yo, we got to address this wick for real. Technically, it's addressed as we came to 50% of it already. It's already technically addressed. Spoiler alert, I do kind of anticipate more downside, but I'll get into that. But for now, just why did I know we were coming down more is the monthly wick is one thing to look at, and also the weekly to me hadn't accomplished its objective. I don't think we made this strong push down to just make equal lows right here and just leave that in the market, and that was the low. And next thing you know, let's just freaking leave this area and go make more all-time highs. Like, nah, I felt that because we had unfinished business on the downside, it was any move up was probably going to get shorted, because to me this is, like I said, unfinished business. It's not finished. So I am expecting downside out of that. So I say that to say, like, when we head to the charts, you can't just hop to the lower time frame. You have to get an idea what the market is trying to do, because then it frames everything. Now, as we know, I give you the macro outlook, like, and I'm not talking fundamentals. I'm talking about higher time frame outlook. Monthly is telling me there's more downside. Weekly is telling me there's more downside. The daily area that was telling me everything we needed to know was, it was all about this fair value gap, and I said that. And then some people say, hey, yo, Rel, like, what about this bullish fair value gap? Like, we could bounce there and go higher. And I'm saying, yo, I'll tell you right now, if it's not this one, it is not going to be this one. This is not going to send us to any new highs. I knew that already. And I said that way before we touched it. I said, this one right here. This is the last line of defense for bullish people. That's it. If this don't work, we going most likely to the lows, but definitely not about to bounce here, you know. And so notice notice what happened here. Let's hold on this. We get to this fair value gap. Yeah, and people in the chat saying you definitely did. I was calling it for a while, you know, and we get to this fair value gap and we get a reaction. What does that reaction send us into? And this is where you start looking at order flows, because you might say, oh, we have I'm gonna erase this. You have a bullish fair value gap right here. I'm gonna just write this because people are visual. So we got a bullish fair value gap right there. So this is supposed to send us to the upside. But then do you realize that simultaneously we had created a bearish fair value gap right here? And so this is where we have that, you know, battle of the fair value gaps. Who's gonna win? How do you know who's gonna win? You have to go to the higher time frames. I already told y'all, based on the weekly and monthly, I understood that if we truly had intent on pushing into my truly desired area for rejections, we would have used this one. This would have taken us there. If we invalidated this, we're not going there. Like, we're not going there if this gets invalidated. So yeah, we get to the bottom bullish fair value gap, but I had the fact that we there already tells me we're bearish. We should never be this low. Price had no reason to do this, right? That's too deep of a retracement for what it was trying to do. It already came too close. Y'all seen how close we got to the purple? We got this close to the purple and didn't tell. So there's no reason to retrace all the way down here just to come to purple. So like, nah, this was just one, like I said, a failure swing. It's also the ideal retracement. If you were to take your fibs, you'll see that it came to the ideal spot that we want rejection. If you were to take it from, you know, from top to bottom, if you drag your fibs from the top to the bottom, where it rejected is exactly where we want it to reject. So it already made the type of retracement it needed to make for more downside. So there's no need to come into the purple to reject. It rejected prior to the purple. So what does that tell you? That actually tells you great information about what to potentially expect. When you see an area of price action that is what we would call a point of interest, such as this bearish fair value gap, and we don't even have enough energy to get there, like, that's showing you that the NASDAQ or price action in general is very weak. Like, it's weak. And so that's great information for you. So when I seen us be so weak that we couldn't even reach here and we invalidated this bullish fair value gap, I'm definitely not believing in this one. And instead, you see where my eyes is at. My eyes are on this bearish fair value gap. So the write-up that I put in the community when I gave y'all like 2 days in a row or 3 days in a row, I told y'all. And let me restructure this. This is a daily bearish fair value gap, as you see, right? I got this from the daily. I need y'all to focus for a second, right? I appreciate you, Joy. I need y'all to focus for a second, right? Look, daily fair value gap. I'm going to the 4 hour. On the 4 hour, we got a fair value gap right here up top, small one. You got this big one, and you got another one. We got 3 of them. And what did I tell you very specifically? I'm not just giving y'all general areas. I'm very specific on where we're gonna reject. I said, yo, this 4 hour fair value gap, I'm expecting us to reject on the lower half of it. If we push into the higher half of it, I'm expecting us to run out these highs right here. So it's an if-then statement, and money will be made regardless. So the expectation is reject right here to go lower, or if we were to go higher, obviously, if we move past the 50%, we're going to run these equal highs up here. So it's one or the other. Now, we come up into this area and we start rejecting it. Beautiful. That's what you want to see. That's exactly what you want to see. Price comes down. Next thing you know, we dropped off. All right. We dropped off into the abyss after that. So you notice what worked out. What worked out was this 4 hour bearish fair value gap. I was very specific on which one. I wasn't talking about this one down here. I wasn't talking about this one up here. The only place that we will reject is the lower half of this 4 hour. I'm very specific on the places that y'all should be looking for your plays on purpose. I'm letting you know there is a level of precision to be had. It's not just, we're not just out here guessing. It's not like, nah, there's a reason why this is the spot we should reject. And sometimes I will tell you, yo, I'm expecting the rejection at the higher end of the fair value gap. Don't think, I always have to get this disclaimer, don't think just because it's bearish, it has to reject in a lower 50%. Right? It's not always like that. Sometimes we may want it to come to the higher 50%. But anyways, so boom. That's that. What was I saying about that? All right, so I think I talked about macro enough, right? We know why we were not focused on the bullish one. We got true direction from the weekly and the monthly, and we know why we were focused on the bearish ones, because we got direction from the weekly and monthly. And so at this point, it's just about day trading. It's just about day trading the move. The best move will come in the direction of the higher time frame. How many times have y'all heard me say that? The best move will come in the direction of the higher time frame. So that being said, the direction of the higher time frame told us to stay bullish, right? All right, I'm out for whoa. The direction of the higher time frame told us to stay bearish, right? So Pete, look at the bullish move. This is disgusting. Who wants to trade that? Who wants to trade that nonsense? I don't know about y'all, but I don't. That's a headache. That's the stuff that made me want to quit trading. I don't even want to deal with stuff like that. You feel me? Now, what type of trades do we want to take? Directions that match the higher time frame, such as this drop off, that make a lot more sense to me. All right, so with that being said, we wake up on Friday. We wake up on Friday, and this is what happened in the market. Let me tell y'all something, man. Let's move it to right here. Actually, I'll move it to like right there. Perfect. Okay. This is before non-farm payroll. Non-farm payroll is pretty much the most important economic event in the market. Like, that's when they tell you the employment data, and especially in a time period like this, where the Federal Reserve is trying to make decisions on interest rate cuts, is largely driven on the labor market. Do we have a strong labor market? Do we have a weak labor market? That helps guide their decisions. And so that data set comes out at 8:30 a.m. So prior to 8 o'clock, this is what I woke up and I saw the market look like. I was like, oh my God, this is a headache. I know we tried to drop off overnight a little bit. You see, this is a 3 a.m. hourly candle in the middle here. And this is a bearish fair value gap. But I'm telling y'all right now, and this goes back to signatures, things I teach my mentees heavy. If we were going to really drop off, we wouldn't revisit this fair value gap right now. So the fact that price even was revisiting it is already a bad sign. Like, bro, I'm not saying we're not overall bearish. I just think the move is not ready yet. So once I saw price revisit this, I just like, yeah, that price not ready yet. Like, the fact that we've even coming back to this purple area, once it was here, I was like, yeah, nah, it's not ready. Cause why did it go back there? That's a bad sign. So now, boom. What's something else I said headed into this news event that I want you guys to remember for the next non-farm payroll, which is the first Friday of every month. If you don't know that, non-farm payroll happens on the first Friday every month. Non-farm payroll, as I told y'all, is typically a two-sided delivery, meaning that the first move is usually a fake out. And I said that in the community as well. Yep, there you go. They saying it in the chat because they pay attention, as people that pay attention to detail, is a two-sided delivery. So the first move is usually a fake out. That candle comes at 8:30. Yeah, you see what's going on. First, they run out sell side. You see this red wick, we come slightly under it. So anybody who has stop losses under this red wick came under there first, and then we pushed up all the way to the sky, sending people to the upside. Everybody bullish, like, oh, look, we ran over these highs too. Liquidity at those highs. Everybody bullish, and we kind of consolidate in the middle. But first move is usually a fake out. We maintain that bullishness a little bit heading into market open. So this is 850, 55. It starts consolidating for real. 925. This is gonna be 930 here, and then we starting to push down. So boom. Oh, whoops, my fault. Wrong time frame. I think I'm just going to go to the hourly, right? Let me see. I mean, I'm kind of revealing it. I mean, you guys was there, so you probably know what happened. Obviously, we dropped off and everything, but I'm just saying that after this sweep here and everything, and we understand non-farm payroll is supposed to be a two-sided delivery, there's room to get involved on the downside. After noticing the upside, which is usually a fake out, there's room to get involved in the downside. But I told y'all, very simple instructions heading into market open. I said, yo, these lows right here, which is the lows of London. Actually, I'm supposed to go to the other chart because I have more annotations on it. Hold on. Yeah. Hold up. There's stuff I didn't even say that I wanted to say. Hold on. Facts. Okay. I remember this now. My fault, y'all. All right. So let's kind of even get in this in more detail. So basically, you see this candle. This is the 830 candle. This is non-farm payroll. By the way, this is NASDAQ still. This is still NASDAQ. Don't trip. I'm just showing y'all on a different NASDAQ chart. Feel me? So boom, we pushing up. The market eventually opens up, and we're largely consolidating now. This red candle that broke the black box, this red candle here is a 932 candle. But what happened immediately? This green candle at 933 came in and closed in this area. If we're gonna break consolidation, we want to see it broken with a fair value gap. When we broke consolidation and came back in, eliminating the opportunity for a fair value gap, that for me, it says, yo, it's not ready. I don't want to get involved yet. Now we finally leaving it with what? A fair value gap. That fair value gap here did not get traded back to whatever. Now we starting to push down. I told y'all in the chat, under London lows, it's gonna get very ugly for the NASDAQ. And I said, don't trade inside of the range. What range am I talking about? You see this hourly chart? This range. Don't trade inside of this chart, inside of this range right here, because it's dangerous conditions. And I think that you're risking capital in improbable conditions that I don't care what you want to use. A bullish order block, a bearish order block, a bearish fair value gap, a bullish fair value gap, a bullish insert PD array, insert POI. It doesn't matter. They're all lower probability as long as they exist on the inside of any given consolidation. So we don't try to trade on the inside of consolidation. So I told y'all, listen, NASDAQ gonna get real ugly under these lows, which is the lows of London. And so I want to try to keep that in mind. So even though around right here, you can see we're starting to see our first bearish signs, like, wow, we broke this consolidation after the morning run up. We broke it with a bearish fair value gap. Then we made yet another bearish fair value gap, and we tapping into it and made a lower low just now, So Growth only said, do you need to see a 1 hour close outside of the range? Great question. And in this scenario, it depends what type of trader you want to be. Ideally, you would love to see a 1 hour bearish fair value gap leave a 1 hour range, but it's just that on a day trading level, that's kind of a lot of time to wait for that. So what I would typically do there is, I want to see if we're losing London lows. I want to see us lose London lows with fair value gaps on the lower time frames, because I'm expecting a real drop, a real hard drop, and we're gonna see that. We're gonna see that. But so I got you. We're gonna get there in a little bit, right? And it's all good, D-Love. It's all good. That's why we're going through this now, because that's the whole point. Like, we taking the gems from last week so we can apply them to this week and the week after, for the rest of our life. So everything happened for a reason. So boom, we got this fair value gap on a 1 minute. Let's see how it's working out. We dropping off pretty hard, right? That's nice. Comes back into it. Gonna get consolidated here right now. Okay, this is where, same fair value gap worked out. This is also a bullish order, a bearish. It's also a bearish order block. See these 3 green candles? People that came to my masterclass understand that that's a bearish order block. Look where it reacted to the exact tick where it's posted. All right. Someone said, what is a fair value gap? I wonder if I could explain fair value gaps in 30 seconds. I want to see if I can explain it in 30 seconds. Nah, it's a great question. I use it so often. I have new people here every week, and I understand that. So I'm gonna try to explain it in 30 seconds. I feel like this is gonna help at least 5 people in here. I bet it'll help at least 5 people in here. Let's see if I can explain fair value gap in 30 seconds. Let's do this. Let's do this right here. All right. Basically, it's a gap of fairness. It's a gap of fairness. Okay. So understand that the market wants to bring efficiency. It has a real aim at bringing efficiency. So if something is inefficient, it's probably going to get addressed. And what is inefficient here is the fact that in this area, the only people who had a chance at this price action was buyers. That's why there's a big green body right here. You see this big green body? It's just straight buyers. That's why it's green. But if I were to ask you what happened right here in this wick, you see this wick right here? If I ask you about that wick, what would you say? You'd be like, well, that's not just buyers. There's a reason there's a wick there. Like, that means sellers took it back down. I'm like, no, you're right. That's a great point. That's a great point. So that means, like, in this area, you had sellers and you clearly have buyers. So this whole area right here is balanced out. If you really want to get intricate, we close right there. If you understand candles, we close right there and we opened up right here. So in order to close here and then open up down, that means sellers had to take it down for the open up. So this whole area is what we call efficient, because we had sellers in this area, we had buyers take it back. This wick already showed you that sellers had this area. So overall, if I was to make a rectangle, I would say, yo, this whole ish right here, this whole area is efficient price action. It's a balanced price area. All right, now we handled that. We already explained that this is balanced, but if I was to ask you about the rectangle, you can be like, nah, this rectangle is just straight buyers, and you're absolutely right. All right, we're looking at all the buyers right now. No sellers had a piece of this, no sellers. Boom, now we come to this, and you see that this wick shows that at a point there were sellers involved. That's why it turned into a wick. So in this area right here, I can mark this off and tell you, yo, this is a balanced price period. So what part is imbalanced? The part that's imbalanced is this green body. So what we're doing with fair value gaps is we're pointing out the imbalances in the market. That's all we're doing. We're pointing out the places of price action that is imbalanced. So I'm gonna erase those and I'm gonna show you the real rectangle. The real rectangle we draw is strictly the body. Why? Because that is the gap in fairness. That is the fairness gap. It's not fair. Only buyers had a chance. Where my sellers at? Why my sellers can't get no PC? Like, my sellers can't get to eat in here. That's not cool. That's not it. And so that's how we draw fair value gaps. That goes in both directions. So you need 3 candles at all time. Any 3 consecutive candles can give you a fair value gap opportunity. All right, just like there was 3 candles here. There's a green one, the red body, and this red wick. And so I could put a rectangle right here and say, hey, this is a quote unquote bearish fair value gap. Now with this information, it's like, oh, it's lit. I'm about to be taking sells and buys on every fair value gap I can. No. Don't do it. Don't do it to yourself. I just showed y'all on the 4 hour how, look here, there was 3 fair value gaps in a row. You had this one, you had the blue one, and then you had one right under it. There's 3 in a row technically. How? Look, you got these 3 candles. You got these 3 candles. Remember, you need any 3 consecutive. And then you also have this, and this. These 3 down here. That's why I said technically you can draw 3 fair value gaps if you wanted to. You got one right there, got one in the middle, you got one up top. All right, so like, yo, which one are we supposed to use? That's a fact. That's where the expertise comes in. That's where the knowledge comes in. And that's what I eventually teach people. That's not for today's class, but you have to know which ones are relevant. Okay. Fair value gaps. So he asked in the chat, like, yo, what time frame should you look for them on? Every time frame. They're relevant on every time frame. There's so much knowledge to fair value gaps, like so much knowledge that I can't even try to do that in one class if I wanted to. There's so much knowledge to speak about with them. But I'm gonna keep us locked in on what we're going over today. But in future classes, maybe I'll go more in depth. But for now, I'm gonna get back to this part of the presentation just for time purposes. But I do appreciate the questions, and I want to help as much as I can. But I'm gonna stick to them for right now. I'll stick to this presentation right now. So boom. Now this is a fair value gap. You see that price had used it to go lower. Okay, cool. So what does this tell us? Let's get back to what we were saying here, right? What does this tell us? That tells you that order flow is shifting bearish. Why? How do you know that? Well, I'm noticing that bearish PD arrays are working out. I'm noticing that bearish tools and price actions such as a bearish fair value gap, such as a bearish order block, these things are working out. I love that. Oh my gosh, that's telling me a lot. Like, wow. But you know what? The actual route said it's probably still not a good time to enter because we're still technically trading inside of the hourly consolidation. I completely agree. Wait for a little more confirmation. Let's see if we have another bearish PD array that can work out. All right. And so let's see. We have yet another 1 minute bearish fair value gap. And for those that don't know, when I say SIBI, that's me saying bearish fair value gap. Okay. So we have another one right here. We want to see if bodies can hold this area. And if we're in bearish order flow, the expectation would be that bodies would indeed hold that area. All right. Oh my gosh, would you see that? Bodies are holding that area. You also have, need I say it, a bearish order block here that's also working. So if you see it via fair value gaps or you see it via this is a bearish order block, price is rejecting bearish PD rates. It's like magic. It's like as soon as we are actually bearish, all of a sudden everything bearish and price action just works out. It just magically works out. I love this game. Don't you love this game? So now we holding this. Yeah, I see where my entry was. And by the way, the reason why I entered here is because I'm like, okay, exactly what I said. I said, yo, I'm noticing this. I'm still staying cash because we're in the hourly consolidation. So I'm like, you know what? I know we broke the 1 minute consolidation, but we still within the hourly. So relax. Like, I'm like, yo, back to it. Relax. Like, don't be too eager. Wait for confirmation. Don't get caught up in no chop. But I see the signs. They there. Boom, we drop off. We respect another bearish PD rate. I'm like, oh my gosh. It's so tempting to get in. I'm like, yo, let me just chill though. Let me chill. How many of y'all have to talk to yourself like that where you just want to just hop in, but you're like, you know what, let me wait for confirmation. Like, I can't be the only one that be talking to myself like that. I'm like, let me just chill. All right, boom. It's just me. All right, copy. So look, we dropping off. Boom. I see price, respect this bearish OB while simultaneously respecting this bearish. Oh, not just me. All right, cool. So I don't feel alone. So it's respecting bearish. I'm like, yo, this time I'm about to hop in. Plus, what was the plan? When we lose London lows, the market is gonna get ugly. You see where London lows is at. You see where my entry is at. For those that are not for those that are not in the free community, like I just show this here. Like this was my play here. So that's why you see 19,716.75. Same drawing, right? You see the NASDAQ, the SIBI, this is my play. That's where I entered that right there. So boom, 716.75. That's where I entered. Now, how am I entering over this 1 minute SIBI? How am I doing that? Well, for me, I'm using a 15-second chart with the same logic. You see how the 15-second was in consolidation, right? If I was to highlight this consolidation in 15-second, I'll highlight it like this. They in a consolidation. What did they do? Ran above buy side. Beautiful. Ran out all the stop losses that existed on these highs. Boom. Coming down strong. We leaving the consolidation with a fair value gap. So this is me anticipating a fair value gap is about to happen. That's why I entered right here. I went short, and obviously I'm looking for price to run the London lows. Am I gonna take profit at the London lows? Take the 13-point play? No, because we're supposed to get really bearish under London lows. I just got in a little bit early based on some 15-second confirmation that I needed. Once I seen us lose this, I was like, yeah, it's a go. All right, so boom. Oh, and once again, I'm looking at order flow. You can see on the 15-second, prices all of a sudden respecting these 15-second PD arrays. Dang, it's like 15-second is the same thing as a 1 minute. The 1 minute is the same thing as a 5 minute, which is the same thing as the hourly, which is the same thing as the 1 day, which is the same thing as the weekly, which is the same thing as the monthly, which is the same thing as a 6 month. I don't care what you say. Price is fractal. Price does the same thing on every single time frame. When you realize we're trading an algorithm, it'll change your life. So boom, we enter here, we going short, we lose London lows. And honestly, like really the rest was history on this one right here. So we looking at it from a 1 minute perspective, and price really dropping. Things going well. boom, boom, boom. We holding this, we doing well, things are going great. And then we come to one of our targets here. So what I'm doing is I'm getting targets based on old liquidity pools. All right, now I'm getting targets, and then we have this big retracement. So people was wondering like, yo, Rel, like, how did you get out at the bottom? As you see here, these are daily lows from a previous day. When we get to a target, I'm always looking at, I'm always looking at the lowest time frames. I'm not trying to say way too much, right? I'm starting to get into like mentorship material a little bit, but I would just say I'm always looking at the lowest time frames, okay? And I'm using the signatures we have on lowest time frames to tell me, oh yeah, the dump is over. But I would have to have the right targets. Like, yeah, see, I clearly had the right target to where I avoided in 100. Matter of fact, this went from 505 all the way up to 644. That's about 140 points. This retracement, quote unquote, retracement was 140 points. And guess how quick it happened? It happened from 10:57 to 11 o'clock. In 3 minutes, we just retraced 140 points. So yeah, you got to get out the way, because sometimes they'll take your head off real quick. Like, everything was all sweet when we lost London lows. Like I said, that was a morning write-up. When we lose London lows, it's going to get ugly. So even if you're a breakout trader, you definitely made money here. So boom, we dropping. And then next thing you know, as soon as we hit a target and it retract, boom, it took back 140 points from you. And you don't know what to do. Meanwhile, me and my mentees is getting out around here. We getting out around here. We already know what's happening. You know what I'm saying? We know the best places to exit, and we're using the lowest time frames to do it. So that's what it's about. But then why are we not reversing for the day? First and foremost, based on a phase 2 concept, I already knew that we put the high end of the day already. So something I'm able to do is I'm able to know very early in the day, have we put in the high or low of the day? All right, so I already know that we put that in. Now, we also have some algorithmic levels that are relevant to price action. So we come up, this is an algorithmic level. For example, you see how we rejected it pretty much to the tick. This market is coded. One day you will realize that. We reject that level to the tick that we need to, and then we're coming down. So at this point, everything all good. Caught some of these shorts, not from the tippy top though. I didn't get it from the tippy top though, but caught some of these shorts, scalping in and out. You can see it was really wicky. Wasn't the best drop off. It wasn't as pretty as the other one per se. But ultimately, it's like, where am I having price going? I want price to come here today, the next liquidity pool. Why? Because the higher time frame, let's bring it back to the first point in the zoom. The higher time frame tells us where price is going. So did we get to the weekly objective yet? Did we get to the monthly objective yet? Nah. So why do I think we about to have this crazy reversal? No, to me, any rally is valid to get shorted until we reach certain destination. We ain't reached the weekly or the monthly destination. So what am I like looking like? What am I getting bullish for? What am I taking calls for? What am I taking buys for? I'm not doing that. I'm always thinking any rally is gonna get shorted. You see where it got shorted right here. We on a 1 minute now. You know what I mean? Now, here's the ting though. Here's the ting. Let's go ahead and look at this. All right. I'm trying to show y'all what the day looked like for real. All right. This is what the day did. This is 4 o'clock. Boom. This is how the day ended. Choppy. So, man, I have a couple points to make here. Let's see if I can make it somewhat quick. Beautiful rejection. The move was trash. Now, here's another thing. And I gave this play to my mentees. So I told my mentees, I said, yo, if we lose this fair value gap here, we're going to run the low of the day so far. I said I expect, I didn't even just say if, I said, and I expect us to. But obviously confirmation is if we lose this fair value, then we're gonna run the low of the day. Now, where do we go? Technically, we came to the lowest body. those who are familiar with me know that we target the lowest body at swing points as a very safe objective. So yeah, we got to the safe objective, but we did not actually run under the low of the day until 4 o'clock, which was really funny to me. I'm like, y'all annoying for that. These market makers be testing my patience. Y'all annoying for that, but it's cool. It's cool. It's cool. It's cool. So anywho, so here's the thing. And I told my mentees, like, just because you know where price is going doesn't mean that it's always tradable. Look at the nature of this move, and anybody who like trade, these moves are annoying and exhaustive when it's super wicky. Barely any fair value gaps, just super wicky, really in both directions. Like, this is just very bad conditions. This is what we will call chop, consolidation, whatever you want to call it. So one point to make is you have to learn that when price is bearish, matter of fact, I'll show you right now. When price is bearish, it looks like this, right? When it's bullish, it looks like this green candle, these green candles. Like when it has a real intent on going somewhere. When price is about to consolidate, it looks like this. Meaning bullishness, bearish, nothing's holding. Bearish fair value gaps, bullish fair value gaps. Y'all don't believe me? I'll show you. Look, bullish fair value gap. Price uses to go higher, right? Invalidates it. You got bodies that came under it. Invalidated. It's cool. It's cool. We probably not bullish now. We probably bearish, right? All right. So that means the next bearish fair value gap gonna work out. I believe you. Let me see. Bearish fair value gap. Boom. Green body came above it. Clearly, we not bearish either. So bulls and bears are both getting slaughtered. You're in chop. You're in chop. The market has no intent on going anywhere. So stop trying to use fair value gaps inside the chop. Stop trying to use order blocks inside the chop. Stop trying to use whatever you use to get in plays, patterns. I don't care what you do. These animal patterns and non-EMA and 21 nonsense and all that. Stop doing that stuff inside of consolidation because price has no intent on going anywhere. Yeah, I know I could be going. I'm trying. Let me chill out. Let me drink some water. Hold on. Come on. You know how I get, man. Well, y'all be killing me with the animal patterns and this and that, man. So boom. Like, look, stop doing that. It's best to just wait for price to break the range, especially with fair value gaps. Notice we tried to break the range without a fair value gap. Guess what? Price came right back in and ended up running up higher, et cetera, et cetera. But like, I'm telling y'all, man. I'm telling y'all, just my bad, y'all. Let me stay focused. So what I'm trying to say is just yeah. Just because you know where price is going doesn't mean it's a tradable move. You need to protect your capital. I don't want y'all to bank on any price target so much that it's gonna destroy your account. So for example, when I tell the mentees, yo, if we lose this fair value gap, we going to these lows. All right, we got there. You know, they was kind of annoying for this. I ain't gonna front. They was kind of annoying for that, but it's cool. It's cool. When I tell them that, and the move looks like this, I literally told them during the move, like, yo, protect capital. Like, protect capital. Don't do it because the delivery is not what it looks like. When we're bearish, I swear to everything I love, bro, if we was bearish, it would look like this. Boom. Straight like that. I promise you, it's not going to look like this. And so once you start noticing price moving in a certain manner, just get out. Just be like, yo, bro, I'm not about to get caught up in chop. Don't let your your emotions bank on one play to deliver your account, because you could literally blow your account trading this nonsense, and it's based on one play. All your hard work from the whole day, just gets negated with you forcing the action on one specific play. Just don't do it. But yeah, is there a particular? Oh, wait, my fault. I thought I saw something new. All right, so boom, and in the chat, I know I'm missing some things, but because it's on YouTube, I try to like keep talking as much without addressing the chat too much, just because it's on YouTube. But y'all know after the recording, I always try to come back to the chat and address anything I missed. So, all right, so boom. Now, here's the other point I wanted to make on this. Now, if y'all know me, y'all know I'm like ultra transparent all the time. You know what I'm saying? Like, that's because what I gotta like not be transparent for? Like, what the heck? What the heck? I don't know why people do that. If you dealing with somebody that do that, like, don't deal with them. Anywho, so for me, like, I don't like me. What was annoying about Friday for me was I made a ton of money on the drop off, and I made a lot more than I need to on a daily basis. Meaning, like, we should all have daily profit targets. That it's like every day I want to come in and make this. That doesn't mean every day you will make that, but it's just a goal to set. Now, once you actually hit it, I like over doubled what I was supposed to make for real during the trending price action. During this, my rule for myself is that once I make my money on my different funded, I need to transfer over to maybe do an eval or something, or obviously just stay cash, because once I make money on all the fundeds, that's the money I need to protect. That's the money I want to obviously get paid from. So, you know, exposing yourself back to the market is dangerous. It's very, very dangerous because the market doesn't provide profitable moves all day. Don't learn this the hard way. You will learn it the hard way. I know that in my heart. You're going to learn it the hard way. But maybe my words will make a difference for one person. Like, you see how the market gave beautiful moves like this? This was it. It was shut down by, let's just call it 11 o'clock. From 9:30, the first hour and a half, fire. The rest of the day, dirt. And that's because the market is not giving you proper moves all day. So it's real life. Like, once you hit your profit targets, it's best to stay out the market. The worst, that's why I go and do an eval once I hit my funded targets, because I'm like, yo, best case scenario, I pass that, I get another funded. Worst case scenario, oh my gosh, I lost, you know, $50 on an eval. That's nothing. So, because sometimes it's hard for me to, a lot of times it's hard for me to just, let's say, like, close my laptop and go do something else. Like, especially when this is all I do, not like all I do in life, but more so like this is I do this full time. So like, let's say I'm done trading, like Friday, technically I hit on my targets by like 11 o'clock. So technically it's like I'm low-key free from like 11 to 4. And it's like, well, but I know the market is moving still, so it's hard. So like, I'm sure some of y'all can relate to that at some level. So I'm like, yo, it's just best that I do eval in time periods like those. That's my suggestion to people who have like a potentially an over trading problem. Do evals instead of fundeds, you know? That's one. But there are days like Friday where your emotions get the best of you. And I was telling my mentees this as well, where, yo, as much as we strive for perfection on a technical analysis level, you're still gonna make mistakes. You're never gonna win every trade. I think that we somehow have a ridiculous belief that one day we're gonna be perfect with our discipline. That's not gonna happen either. If you think you could be, if you know you can't be a perfect trader, why do you think you're gonna be perfect on discipline? It's not gonna happen, because you're a human being. Human beings will mess up on discipline. And so you could be great at discipline, but you're gonna still have certain days. So you need to have systems put in place to prevent significant drawdown on your accounts when your discipline is off or your emotions get in the way. All right. And so for this situation right here, I know I hit my targets. I know I was supposed to be doing an eval. Nope. On Friday, I hopped back in with my funders and I gave back a decent amount of my profits that I had made. And like, this is a lesson that I've learned many a time in my career thus far. But Friday was another hard lesson. Like, this chop, I gave back stuff trying to trade it. You know what I mean? I'm recognizing it. I'm like, yo, I know we in chop, but I still trade it because I'm a human being. I got emotion. And so, you know, I say that to say, like, I think it's always good to like help each other out with reminders. Like, yo, you make your targets, get out the market. I gave you a strategy. Hey, if you are scared you're gonna overtrade, do an eval instead. If that don't help you, you know, I feel like I'm saying a lot to where I feel like I'm rambling, so I don't want to like get in detail, but like just come up with systems, because I shared the system I came up with on my mentees. We have a channel in the Discord called like the journal channel, where we could write like journal entries. So I put a journal entry in there. It's like a long essay I wrote on a Saturday, just like explaining everything and explaining the fixes I'm gonna make to make sure I don't have another day like Friday where I give back profits. So just, you know, you have to brainstorm, come up with a system, find a way to punish yourself, make sure the punishment still benefits you. So one thing I told them I'm gonna do is like, if I go back in and I lose more than 25% of my profits, I'm gonna have to do 200 push-ups by the end of the trading day, you know? So it sucks. I don't want to do 200 push-ups at 4 o'clock after trading all day, but technically it's low-key beneficial, you know, get a little stronger, why not? But it also sucks. And so like that's demotivating. If I'm thinking about trading again, I'll be like, yo, you gonna do 200 push-ups? I'm like, nah, all right, so chill out, go do that eval, go do whatever, you feel me? So yeah, there's a lot I can say. I don't want to like stay here too long. I know I gotta get to like some more technicals for y'all. This is like low-key a psychology talk. I know we talked about a lot of technicals so far. You guys, I took y'all from the monthly all the way down to the 15-second, and we talked about how to kill this whole drop off. I told y'all the market doesn't provide profit moves all day. That's why you come to this section, and it don't matter who you are, you can lose money trading chop. And so it's just best to make your money and protect capital at the end of the day. But have systems in place for days where you lack discipline. You need to have systems in place for days you lack discipline. I'm gonna say it one more time. You need to have systems in place for days you lack discipline. You will lack discipline again. I don't care how nice you are disciplined. There's gonna be one random Wednesday in November where your girl broke up with you or something and you just going through a lot and you just lose discipline. Your man is acting up. He keep liking girl pictures on Instagram and you can't think straight, and now you over trading and you oversized, and like trying to tell y'all, man, like life happens. You know, I know why I slipped discipline wise. There's something that's kind of been in my head that kind of throwing me off my game a little bit. So it's like it's important to have systems in place to prevent these things. You feel what I'm saying? So I'm gonna get off that point and kind of like let's get into the second part of class. I'm gonna try to get through this part fast though. You feel me? Oh, and by the way, these market makers is evil because look what they did after 4 o'clock. I want to show you this as a finale. Literally got to my real target at 4:30. At 4:30, like they are so like I don't understand, bro. Like they be getting me, but I'm gonna get them back this week. Because they like that's so foul. Like they did this whole move after 4 o'clock. That's so like it's treacherous, but it's cool. It's cool. No beef. And that's currently where we sit right now. So with that being said, let's I guess we sit right here right now. But yeah, with that being said, let's kind of can finally clear that chart out. I don't really need this. Let's talk about this upcoming week for real. Let's lock in. Let's lock in. I don't need none of that, right? Nope, we don't need none of that. We don't need this. All right, clear these charts up, man. I think I'm gonna still keep this on though. This should be, and that's probably it. All right, now, what do we do every time we come to the charts, man? We need to know what's going on in the economy, and not even necessarily understanding it. Like, hey, like the employment numbers have to go up for power to cut rates. And like, I'm not even saying that. You just need to know which events are important because the market will not move unless there's some type of economic report coming out that can help foster that movement. They need a reason to move price action. Imagine we got these 100-point candles and stuff with no explanation. Who the heck would participate in the stock market? Like if it was just mad, like crazy, violent movements, nobody would participate. They need to, it's like smoke and mirrors. They need to be like, you know what? We're gonna take price lower. We're trying to take NASDAQ to, 4,000. But let's do that around this economic event. It makes sense. Let's do it around CPI. Let's do it around CPI because then it's explainable. We're not scaring people out of the market. We need those people because there has to be a buyer for every seller and there has to be a seller for every buyer. We can't scare everybody out the market because we make money on you investors. We make money on y'all. So we need a reason to explain those aggressive movements that make us our money. Interesting. So with that being said, yeah, we got to know when those movements will occur, and all those movements are seen in a chart. I told y'all exactly what happened on NFP before NFP came out, right? If you've been with me for months, how many events have I called out stock market wise, like what's going to happen before the news came out? It's not a coincidence. It's always in the chart. If you know what to look for, you'll realize that this whole market is predictable for real. It's just that you gotta know when it's going to happen. It's going to happen when they said all of them. Yeah, it's we've been highly accurate. I'm not gonna front for like quite some time, and so it's like it's just about knowing when. So that's why we come here for people that's new in the room. So we start here. So this week, what's to come? We got CPI on Wednesday. We got PPI on Thursday. And we got consumer sentiment Friday. I think the second half of the week will be lavish. Now we're coming off of non-farm payroll Friday, so sometimes like the market is still reacting to that on the upcoming Monday. So I wouldn't be surprised to see Monday's price action be all right for real. Meaning like we can have some trend. Like iPhone said, time and price, indubitably. And I'm telling y'all, anything in the chat that I missed, I'm gonna try to address it after the recording because I know I see like a bunch of stuff that I missed. So I apologize for that. I just don't want to mess up the YouTube too much. So man, yeah. So yep, you guys see the importance events. Something I want to point out to y'all is to keep your eyes on the CME Fed Watch tool. I will explain this in 30 seconds for y'all. This is the official tool that can give you predictions on what the Federal Reserve is planning to do when it comes to interest rates. This is an official tool to use. It's not like just some nonsense. Like if you ever follow Walter Bloomberg on Twitter, you'll see him, reference this tool very often. And so basically right now, if you see here, it says the current target rate is 525 to 550 basis points. All right, cool. That's where we're currently at. That's currently the, where the interest rate is at. And what they're saying at the bottom here is for the September meeting, which is happening on September 18th, 10 days from now, we have an FOMC meeting. The bets are, this is what the probabilities are. There is a 71% chance that the Fed is going to decrease interest rates by 25 basis points. I ever heard like, oh, we're decreasing by 25 basis points. This is what they reference in here. And there's a 29% chance that they're decreasing it by 50 at the September meeting. How am I doing that math? Look, what's the first number here? 525. What's the first number right here? 500. That means that in September, there's a plan to decrease it by 25. What's the probability? 71%. All right. What's the probability going down 50 points? 29%. Okay. A day ago, these were the percentages. A week ago, these were the percentages. A month ago, these were the percentages, okay? And that's how you use this. So it's important to keep your eyes on something like this because it also could be a level of confluence for your trades. I'm largely somebody that just bases everything on charts, but I still like to keep in tune with like, hey, what is the fundamentals and what's the economics saying at the end of the day? I still want to at least keep it in the back of my head. So these are expectations here. You see that after NFP, you see that it got really probable that we're going to do a 25 basis point decrease on interest rates. He's supposed to cut rates by 25 in September, 10 days from now. Right before NFP, I had class with my mentees. I told them these numbers will change after NFP, and they absolutely did. Do y'all remember how much the numbers have changed? Now we see that 25. When we were looking at it, it was almost 50-50. After the employment data dropped on Friday, you see that it changed. Now it's like they're strongly betting on a 25 basis point decrease. When CPI comes, CPI is going to change these numbers again. CPI is Wednesday. Now, back to the charts. Sheesh, this class taking a lot of energy, low key. I'm saying a whole lot. Now back to the charts. I ain't gonna find any water. Are y'all getting something out of the class so far? Can I get ones? If y'all getting, can I put a one in the chat? You getting something out of the class so far? Like I need energy. I need to know if y'all getting something out of it. Appreciate you, Joy. Oh yeah, man. Thank y'all. There's a whole lot of ones coming in. I need this energy every week. We hit every week. You know that. Nah, I appreciate y'all though. It's giving me. This is the energy I need. I'm like, all right. If it's being received, then it makes me want to keep going. So let's get it. Nah, I really appreciate the love. So let's get it. Yeah, we back at it. Got the water. Got the energy from the team, and we lit. So let's start with DXY. DXY, man. Okay, ignore all these rectangles. I know it's a lot because they're coming from different time frames. So just ignore them. My chart is never busy like this. Focus on the matter of fact. I'm sorry, I gotta do this because I can't do the noise, and I'm sure y'all can't do it either. Perfect. Look, you got a monthly city and you got a monthly BISI. DXY has been consolidating here for so long, literally since December 2022. We've been consolidating in here. We've been up and down, bouncing between a bearish fair value gap and a bullish fair value gap. And it's like, who gonna win this battle on DXY? And we're coming down strongly right now. So far, September is still going on, but so far we may have a bearish fair value gap on the monthly right now, after reacting to a bearish fair value gap on a monthly. So that's a good sign for potential downside here on DXY. Now let's go into the weekly time frame. And let's go to the weekly time frame and see what's been happening. I told y'all to pay attention to order flow. What PD arrays are being respected and what are being disrespected. We had a daily and a weekly at the same time. Bearish fair value gap get respected. Price came down, created a daily bearish fair value gap. I told y'all this at the time when it happened. I said I expect price. I told you about this one too. I told you about both of these. We called everything up and down. I'm not gonna lie. Like we said, price gonna retrace, use this to go lower. I said price gonna use the lower half of this fair value gap. We're gonna use the lower half of this fair value gap to go lower. And then we dropped off again. We targeted this yellow line. Cool, we got there. Boom. And this retracement, I said we're gonna come into this blue area to go lower. We obviously didn't get to the blue. We didn't get up there. We didn't get that high. So this is another failure swing, which is interesting to me because it almost shows me a level of weakness. So we're either about to be like weak and drop off harder right now, or price could consolidate here for a little bit, maybe until CPI. But my expectation on DXY is like, we came to these lows, we ran sell side liquidity, you see? We ran sell side liquidity, we pushed up. Ideally, we should have came into this fair value. We didn't get there, and we're just kind of smack in the middle. So if you trade Forex, for example, I would say take it easy until CPI. CPI will give us direction. You know, if we trade past this fair value gap, we're gonna run into these highs. All right, if we trade past this blue, we're running to the blue above it. If we, I mean, it's self-explanatory. If we drop over, we're gonna continue dropping. I mean, I favor downside on DXY personally. I think that DXY is gonna end up going lower into running these lows for real. I think this is a time period to end up running those lows, but it's definitely, you know, still some confirmation needs to be had. And sell side liquidity being, basically liquidity on the downside. Liquidity will be in the form of people's stop losses. If you think about the fact that on this run up, as we ran to the upside here, people who went long, where do you think their stop loss is? Their stop loss is very likely to be right here. There's like a pool of stop losses right here. Price targets stop losses, you know? So that sell side is stop losses that exist under where price is right now. Buy side is stop losses that exist above where price is right now. So in other words, this is buy side liquidity because there's people who have stop losses at this swing point, and there is sell side liquidity because there's people who have stop losses under this swing point. All right, so that's a very quick way of saying, you know, liquidity. So that's that. Now let's get, so once again, just wait. I would say wait for CPI for DXY to pick a direction, because where it's at is a very, very, very crucial area. I favor downside though. I'm on record right now telling you I favor downside on DXY. Now, man, ZT, y'all know the rule I have. I don't never move my arrows. What I tell y'all about ZT, this is a 2-year bond. 2-year bond. So boom. 2-year bond. Whoever been with me, we've been charting this since down here. Every retracement, we called out where it'll retrace to and where it'll bounce from the daily chart. I deleted all of them now. But we had talked about this BISI. We talked about this BISI. We talked about this little BISI right here. We talked about this BISI right here, bouncing price. All of these worked out, and our main target was for price to come into this monthly fair value gap. So we literally called it from the bottom all the way up here. And how did I know it? I used the monthly chart. Signatures on a monthly chart. That's how I knew that price is coming to the blue area next. That's why every daily retracement was real easy to tell. I'm not just getting lucky. The monthly already told me we going to the blue. So I know every retracement on the daily is going to get bought up. Where is it going to get bought up? At PD arrays. like this. This is a PD array. Where is it gonna get bought up? At this PD array. Why? Because it didn't get to the blue yet. So boom, we get to the blue. We get to the blue. Are we going higher? Are we going higher? I don't know. Let's find out. We're at the destination. We do what? We reject it hard. But when we reject it, we come down so choppily. I told you, if we were truly reversing, it wouldn't come down like this. If we was really about to reverse off this SIBI, it would have came down hard, very hard. Trust me. After a run up like this, if you're trying to shock people and shock the market, you're not going to stagger down. So when we coming down so steadily, and I look at the weekly and I say, oh, it's a weekly bullish fair value gap here. Oh my gosh, would you look at that? It's a weekly bullish fair value gap. Yeah, we using that to go higher. We want to use this to go higher. I know we're not done with the uptrend yet. And so that's why I had drawn the arrow like this. And so, you know, so far so good. We pushing up. Ideally, we want to make it above there. We'll see what's up. But it's the 2 year, and this can help you, you know, frame trades on the NASDAQ. And also, you know, the Federal Reserve is supposed to cut interest rates. And it's been in the chart. Since before, it's been in the chart. I've been telling y'all about interest rates since down here. Accurately. Before any economic news comes out. This is just proof to show you it's always in the chart first. This is directly related to interest rates. The most, like, it's the bond market, yeah, interest rates. So just know it's in the chart first. Don't ever believe the smoke and mirrors. Everything is in the charts first. Always, always, always. So what I said about DXY helps us with expectations on Euro. I'm still looking at this as something that could bounce price. I told y'all last week that if it's not this order block, the fair value gap that we're currently in could send price higher, and it absolutely did. Yeah, obviously we used the fair value gap. Price went all the way up here. Now it's trading back down. This is not favorable buy side delivery, but it's also not favorable sell side delivery. So guess what? Whenever I see that the buy side delivery and the sell side delivery is both not favorable, I anticipate some consolidation. That's why I'm telling you to be careful trading Forex until DXY really starts to move again. You don't want to get caught up in chop. You don't want to get caught up in the chop. I'm telling you guys right now, Euro can chop, especially into CPI. So that's for Euro. I have the same sentiment on British pound. Told you guys we should be able to use this BTC to go higher. We used it. We ran all the way up here. Didn't run buy side, but we came back down like this, and then we like, nah, chop. I think that we can consolidate here for a little bit. Be careful. But the analysis that I had is the same. I still think that they're both gonna go higher. It's just like it might not be ready yet. So that's that. Now coming into New Zealand. Everything I said in the previous week, I'm still, that's still the analysis. Like, we want to see if we can use this BTC to take us higher. Still want to see, I said the upper half of this BTC specifically. So we're looking for that. USD CAD. Last week, the plan was we want to see if bodies can hold this daily bearish fair value gap to take us lower again. All right, so we wanted price to come back up into this. Price came back up into it beautifully. Mentees, you may see what's going on. Low key, mentees. Hopefully, y'all might see it, mentees. Y'all don't gotta speak on it though. But yeah. So hopefully, we're trying to see if we can reject this area. I wouldn't want to see USD CAD come above this green candle if I'm expecting further downside. At least in the short term. In the short term, I would want to see it reject nowhere above this green candle. Ideally, bodies should still hold this. Look where Friday closed. Y'all see bodies held there. I don't think that's a coincidence, by the way. If you see where Friday closed, okay, cool. That's fair value gaps for you. Now, I want bodies to hold this, but more like really the last line of defense for me in the short term is I don't want USD CAD to come above this green candle, and then I would still be expecting lower prices, as I am anticipating for it to make really come all the way down into here for real. I think a short-term target would be this weekly bullish fair value gap right here. But I do expect lower prices on this ticker. It's just about timing. Hey, when is it gonna happen, and when is it, like, where is it gonna project? I understand. So that's that. Only a little bit more Forex, and then we going back to like futures. Same thing. I'm expecting lower prices on this. We had rejected. Oh yeah, I wanted price to see if it could come up in this SIBI before coming lower. It didn't even make it up that high. It just went lower immediately. But then guess what? We ran the lows. It's a bad sign when we run lows like this and leave a wick, and then we doing this. Be careful of chop. Be careful of price coming back up into these highs. I don't think it will come that high, but we're literally at the point where we need to wait for more information. Like target hit, yeah, we ran the lows, yeah, but we didn't keep going. We just made a doji. So just be careful of this before the next move. I think forex, all these dollar pairs are largely in the spot where it could get tricky. USDJPY, this is also something we were looking for. We wanted to use this SIBI to take us into this yellow line. It's working out so far, and we wanted to see continuation into that yellow line for real. All right, so USDJPY is still doing what it's supposed to do. I don't believe in any rallies until we hit that yellow line, put it like that. If it rallies, you look for bearish PD arrays on these higher time frames, such as this daily SIBI, for example. Technically, these 4 green candles make up a bearish order block, right? By the way, technically, but I'm expecting continuation, real talk to the downside, here to the yellow. All right, so we'll see. Now let's get into crypto for a second before futures. Man, crypto is at an interesting point. Now I've been vocal about the fact that I told you this last week, so I'll keep this kind of brief. But remember, Bitcoin ran all-time highs, Ethereum did not. Now Bitcoin comes into this monthly BISI, but I refined it. I refined my monthly BISI, and I say, you know what? It's also a weekly BISI here. I'm only bullish on Bitcoin if weekly bodies are holding this weekly BISI. And stubbornly enough, once again, we only got 10 minutes left on this weekly candle. We got yet another weekly candle on Bitcoin that is not going to close outside of the purple area. It's going to close inside the purple, which is just annoying. It's been doing, you can see this green wick annoying me because it came all the way down here, but closed all the way up there. And y'all should know with fair value, guys, as long as we still holding it with bodies, it's still valid. So Bitcoin, we're technically waiting for more confirmation for a downside. I had exited my Bitcoin longs at 70K, and then also in the mid 60s, I exited another position in the mid 60s. So I've been out of my Bitcoin position since 70 as well as in the mid 60s. Now, here we are. I do feel like it's gonna end up losing this green wick. I think if it loses the green wick, it's gonna get pretty bad to the downside. But ultimately, we've been consolidating for like 5 months straight. I'm watching bearish PD arrays, such as I like how Bitcoin had rejected this bearish fair value gap, but after that, it's not really making bearish fair value gaps. So that's always sus to me. Now there is a small one right here that we just traded into. If we could reject this, that would be a good sign for the bears on Bitcoin to take it into the yellow line. So we'll watch this daily bearish fair value gap. Just know Ethereum had the same setup. Weekly BISI that was holding price for a long time. Look at the bodies. Even on this red candle, you see how bodies held it on that red candle? Then we had 2 more green weeks. Yeah, it was still valid. And the next thing you know, the last week of August, we finally went bearish. And now, we've been dropping off. Same thing as Bitcoin. If we lose the lows from the week of August 5th, if we lose the lows of that, I think crypto just takes a dive. So I'm waiting for both Ethereum and Bitcoin to lose those lows, because I think crypto take a dive to the downside, especially if NASDAQ is going to be potentially bearish as well. Solana is same vibes, consolidation, but all eyes on crypto for more confirmation. Bitcoin still ain't confirmed yet. Ethereum did. The rest of the crypto market never truly went as high as Bitcoin did. Bitcoin's the only one who ran all-time highs. And all these other major cryptos did not run all-time highs. So crypto is super sus for upside. And then when you look at crypto tickers like MicroStrategy, like one of my mentees brought up MicroStrategy like when we had class before this class. And yeah, MicroStrategy don't really look good for upside. So word. All right, now luckily I already took you through macro on the NAS. For me, on NASDAQ, largely I'm very interested in this bearish fair value gap. Why? Because we had rejected the one that I told y'all about, exactly how we wanted to, right in the lower half. Yo, it's funny, like my mentees know that specifically we really wanted it to reject right where it did. If it came up to the 50%, I think my mentees will know, like, we don't even want that. But I have to say things to play it safe. My mentees know we're rejected to the tick for real is exactly where we're supposed to. I just say lower half to give myself some room because I don't have y'all on an everyday basis, but this is picture perfect. This is exactly where you want the rejection at. Picture perfect. Anywho, after that rejection, now boom, we made another one on the 4 hour. We need to watch this area. We don't really want to see price invalidate this. So if NASDAQ pushes up at first, we want to see it reject this. As long as bodies are holding this, it doesn't have to reject the lower half. It doesn't have to reject the upper half. Like, nah, just as long as 4 hour bodies is holding this, I'll be happy for more downside. That's one. I don't want to see price come above the 50% of this wick. I don't want to see price come above the 50% of that wick because that would be 2 PD arrays that we invalidated. And ultimately, if price closes above the very same rejection that we got, if we get closures above this on the 4 hour time frame, that's not a good sign. That's not a good sign. I'm not saying I'm necessarily bullish at that point, but I would start to lose some bearishness. Oopsies. I would start to lose some bearishness. So all eyes on NASDAQ rejecting these PD arrays. Ideally this one, because I want to take this one to use it to move lower. Ultimately, I'm aiming for 17,341. You know how we had, you see this? You see how I'm on the daily chart now. On the daily chart, we rejected this daily bearish fair value gap. I didn't draw it. Y'all don't need this no more. I didn't draw it, but it's a daily bearish fair value gap right here, right? We rejected it. We coming down. You see this big red? Monday's candle, which is the candle you're staring at right now. If this could be a red candle and I'm able to come here on Tuesday and say, yo guys, we just made a bearish fair value gap on the daily again, that's really bearish order flow because not only are we rejecting the fair value gap, but we're creating another one. So that shows some nice order flow. So that means we're in bearish order flow and that'll show a potential continuation to the downside. Now, what I'm aiming for, safe target, a very safe target would be the lowest body at this swing point. So if you want to have a safe target of the lowest body right there, you could absolutely do that. I do believe if we come this low, our intent is to run out these equal lows. But if you want to play it safe, I think price will at least come right there. That's also simultaneously the halfway point of this weekly wick, which is a target in itself. And so I don't think that's coincidental. I do believe we're coming here next, most likely this week. CPI is this week, but that's NASDAQ right there. Yep. But I do feel that if we're coming back here, there's no reason I would just be very, 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 very surprised if we just come and do this. I can see us doing this. That's possible for sure. But to just if this is the absolute low, I will be very surprised. That's what I say. And something I want y'all to watch for is potentially chopping on the NASDAQ in this area. I pray to God they don't do this to us, but it's a possibility. So if like right now, I always pay attention to both sides of the market. I told y'all, we ran up, we didn't actually touch a very likely target. Cool, maybe that signifies weakness, like I said, cool. That means that the drop off needs to actually take these lows, because if we now basically, and understand what I'm saying, the bulls never got to their destination. That's my point. So now if the bears don't get to their destination and we do something like this, that means that both bulls and bears never got to their destination. On every time frame, I always anticipate chop after that. I pray to God they don't give us daily chop in the middle of this area. I pray to God they don't do that, but you need to keep your eyes open for that. All right, so the only delivery that should occur is pretty much what I described. We need to reject this or / in this. We definitely don't want to see closures above this wick. And and if we do, we need to make an aggressive move upwards. But either way, like I said, like just be careful. Just be careful. Real talk. So that's that. That's Nazzy Naz. All right. See how I'm gonna breeze through the rest right quick. So boom. ES, real talk, same logic I said on NASDAQ. We watching the nearest fair value gap here on the 4 hour. We got this one right there. Don't want to see closures above there. We're looking at the halfway of this way. Literally the same analysis. By the way, ES, what I did want to show y'all is, what did I say about consolidation? I forgot about this point, consolidation right here. When you leave it, you want to leave it with a fair value gap. That fair value gap needs to be respected. Look how we left it with a fair value gap. We respected it. We dropped off. Easy money. Every time frame is the same thing. I showed y'all this on a 1 minute. I showed you this on a 5 minute. I showed y'all this on a 15-second. And now I'm showing it to you on the 4 hour / the daily chart. It's the same logic over and over and over. Okay. So boom. Now we want to, like I said, see if these areas are respected. If not, just gotta be careful for consolidation, because bearish delivery would deliver how I'm describing. I love what I'm seeing here. This is really nice. This is really nice. So I'm just expecting continuation down much lower. Same target on ES. I'm looking for them weekly lows. Also, I told you about these type of wicks. They tend to get addressed. So I'll be very surprised to see us not come into this area. So I am absolutely looking for downside on the S&P and the NASDAQ, because I don't feel like we're done addressing these imbalances. By the way, you see ES had a failure swing as well. ES came very close to all-time highs. They didn't even get to the highest body on the weekly. That's a failure swing. After a failure swing, you're in danger of having some very aggressive drops. When you have failure swings, there's an aggressive drop that typically ensues after. So I just need you to be aware of that type of delivery. And if, once again, if we don't actually deliver like that, be wary of chop. Okay, that's that. Now, the Dow Jones, I really much to say. I do believe Dow will go lower. That was the only one that ran all-time highs. I know it's hard to see, but they technically wicked above all-time highs just a little bit. So they wicked above it, and then they pushed down hard here on the daily chart / the 4 hour. In my mentorship class, I told everybody the next destination for the Dow Jones is this blue area, which is the daily bullish fair value gap. Does that mean I'm looking for buys off of it? Does that mean I think that we about to do this? No, I actually don't anticipate that, but it's just an easy target. So we got to the easy target. I do think that that will continue to the downside. I don't think we're going to leave this in the market untouched. This is all too pretty. That's that. Russell. This is from the Watchlist last week, I believe. I think I told y'all. Let me see. I could tell right now. Tuesday, Friday. Yep, Friday. Or maybe, no, I put it in the free community. I remember I said that we want to make a daily bearish fair value gap here, and it looks like we ended up doing it. And that will show us more downside is coming. You see, this is the bearish fair value gap that was created right there. So notice after it was made, we had more downside that came. Why? Because fair value gaps can help you determine sentiment. All right, so we're looking for more downside. You see, our price rejected this SIBI here. This is also a breaker. You know, I told y'all we have the breaker block masterclass. Breaker block masterclass is coming Saturday, September 21st, and we're looking for lower prices there. I'm expecting the Russell to make lower prices. We have a big liquidity build up here. I would expect more downside. So overall, I'm looking for that to turn over. Mentees, oh my gosh, mentees. We talked about the Nikkei. I'm bringing it up on the watches. I told my mentees, like, yo, last watches, I didn't bring this up, but I'm gonna bring it up for y'all. And then this week, I'm actually gonna bring it up for the watches people. So the Nikkei is a major reason why. If you remember when NASDAQ dropped off the week of August 5th, the beginning of August, NASDAQ dropped off super hard. Everybody was like, yo, bear market's coming, it's going crazy. A large part of NASDAQ's drop off was based on the carry trade, which is directly related to the Nikkei. Because of time purposes, I'm not going to get into the carry trade and the details behind it, but just know that the Nikkei has a big impact on the NASDAQ right now, in a sense, in a certain way. And so when the Nikkei did what the NASDAQ did, they both came, made relatively equal lows. See, relatively equal lows on this weekly chart, pushed up so suspect. I'm like, yo, I don't believe in this rally. Just like I ain't believe in NASDAQ rally, I ain't believing it. Plus, and it's not just like emotionally, like, no, I understand the market has objectives. So when we fail to meet an objective, it's always suspect. So we push up, choppy, nasty push up, and we fail to meet an objective. Yeah, okay. So what I ask myself is, what are we pushing up for? We have this PD right here. If we're bearish, it's very unlikely that we're gonna end up in like closing above this green wick. If we're bearish, that's all I'll say. And so, you know, that's why I told my mentees, keep your eye on it, on this area. And you see, we dropped those so hard. We really should have took the trade. We analyzing it. We really just take money on it, but whatever. So I'm looking for further downside on this ticker. I like what it did here, and look, we got 2 fair value gaps in a row. Wasn't traded back to it. We might even make a third one, depending on how Monday's candle is. We might even make it like it's talking to us. If we were bullish, we would have bounced here, but technically we already bounced there. Look, see this daily bullish fair value gap? This green wick already tapped into it and delivered higher prices. It already did its job. So this is what we call mitigated. This fair value gap with this reaction was already mitigated. It already delivered new highs in the market. So coming back to it, it's lower probability that it's going to work again because it was already mitigated. That's why it didn't work the second time we wanted to use it. Now, guess what's happening though? Bearish fair value gaps is happening. And so we keeping an eye on that. We want to see more downside. Let's see. CL starting to move a little bit. Keep our eye on that. It's been ranging. I told y'all I'm not interested in CL, but it's starting to move. We lost the internal range. Now we want to see a bearish fair value gap happen on the weekly chart. That means that any retracement needs to be small. What can we learn from this? If you want to see continuation, that's going to largely be in the form of fair value gaps begin to form. This is a weekly chart. That means that I don't want this week's candle to trade up so high that it touches this bottom wick. I don't want to see us trade. I need to show a visual. I don't want to see us trade all the way up to this. That means that we're not going to have a fair value gap. And the bigger the fair value gap, the better it is. So if anything, I'm kind of looking at price. And there's something else I want to speak on, but I'm not going to speak on it because that is a mentorship topic. But I do want price to stay on the lower side of this. So for me, when I come to the daily chart, I'm strictly looking at things pretty much down here that price should reject on if we're indeed ready to be bearish. The daily chart is showing me nothing right now. So I don't like that. I don't like that on the daily chart. So now I go to the 4 hour. I'm like, well, there's a chance we could reject right in here. These 2 green candles could reject price. More specifically, let's just simply say, let's see if this 4 hour bearish fair value could reject price and take us under this yellow line. So this is something I'll look for. And this could be the high of the week for CL. Now, I'm not even trying to call that. That's a very bold prediction to make, but I'm putting in your head that technically the up move for a potentially red weekly candle could be occurring right now as we trade into this. We could reject right here around the, I'll probably go to the upper half of this fair value gap. We could reject around the upper half of this fair value gap and trade back to the downside. And if we go there, right now you see what it looks like in this visual. This will be the top wick on a red weekly candle. This could happen on CL as we reject in here and start making our way to taking out this liquidity. Okay, so this could literally be the high of the week on CL, pretty much in the PD array that we're looking at right now. It's a trade idea. Just because we're in this area don't mean I'm going short. No, I always wait for confirmation. I'm not going to get into confirmation. I talked about it in other classes, and right now I'm running short for time. But I always wait for confirmation before I enter my trades anyways. But we'll see if this could potentially, I'll go ahead and write it for I'll keep my eye on that out of curiosity. If not, and it starts pushing higher, then I will find something else it might want to reject on. But either way, I told you I'm really not a fan of CL in this range. This is the first sign that it might want to move. Finally, it might want to move. So all eyes on it. Gold is another thing. We on gold now. I told y'all gold is technically in a bullish order block right now, and it's been consolidating on it. Will it end up pushing out? I don't know. Gold is something I'm not a fan of. Look at it. Why would you want to trade this? Why are y'all forcing the price action on gold? I'll never understand that. Stop trading this nonsense. If you're taking losses here, you can't be mad at nobody but yourself. You're trading a ticket that has no intention on going anywhere. But we'll see if it continues to hold this bullish OB. But I personally am not interested in gold. I don't recommend gold. Not where it's at. Now, for SPY, same thing I was telling y'all. If we lose this bullish fair value gap, SPY is gonna make a deep retracement, most likely running to these lows. What happened? We lost this bullish fair value gap, and y'all seen the rest was history. Filled in that gap that I told y'all about. Everything went as planned with SPY, and so same analysis I had on ES is what I have on SPY. What else can I say? This will be in the form of affiliate swing. Price did come to technically the highest body though, which is an objective in itself. We did come to the highest body. We just did not come to the highest wick. Highest body, not highest wick. That's why I tell y'all the safest target will always be the highest body. Always is a safe target. If you were in calls, you could have took profits right there. You was waiting on all-time highs. You never got a fill on your play. Now you taking a loss. All right, boom. What I like about QQQ versus NQ is QQQ got to the destination that I wanted NQ to get to. Remember I told you about that fair value gap on NQ that I wanted it to touch, that it fell just short of touching. Yeah, well, QQQ gave me what I wanted. So I'm thankful for QQQ blessing up. They gave me what I wanted. This is literally what I wanted NASDAQ to do for futures, but it did it on options, not futures, whatever. So this is exactly what I was looking for, a rejection right there. And then, the drop off and everything going well. I love how we invalidated this weekly BISI. We knew it was not going to work anyways once we crossed under 50% in this context. I could finally delete that off my chart. I'm looking for potentially a weekly bearish for value gap. So I'm hoping that when we open up, we pretty much maybe trade up for a second before just dropping off. Looking for more downside on QQQ, aiming for these lows right here and potentially even lower. I technically could stop it there. I think there was a couple of things I want to show you on options tickers. We were looking at AMD. There was a battle of fair value gaps on AMD. I'm sorry if I sound like I'm rushing, but it's because I actually am. So we have a bullish weekly fair value gap on AMD. We have a bearish weekly fair value gap on AMD. Who's going to win the battle? I said whoever wins the battle is going to tell us. It's like one or the other. It's like if the BISI won, we would have went to that yellow line. If the blue one wins, I'm looking for us to run the weekly lows. So it's just literally one or the other. So obviously the bearish one has won. We officially closed under. We closed under the bullish fair value gap. I can delete it now. And I'm focused on AMD making it lower here into these lows. I have some confluence from SMH as well. I'll show you that in a little bit. So I'll be watching like bearish PD rates on this price leg as something that could hold price lower. I wouldn't want to see price come above this green wick. Wouldn't want to see that at all. Ideally, the lower it rejects, the better. Like obviously, I would want to see AMD reject this SIBI. The lower half of this 4-hour SIBI. The lower half of this 4-hour SIBI is where I want to see AMD reject for real. To go lower. Doesn't necessarily have to. That's the ideal. That's the most ideal delivery. But either way, I'm bearish on AMD based on that weekly confirmation for me. I don't do patterns, but I know people see like an H pattern here. Yeah, I just seen that in the chat. But I could show you 1,000 H patterns that end up literally like not playing out and going like that. So like my thing is lagging right now, which is annoying. Don't start lagging now. Y'all know how it could get. Remember 1 week my computer was lagging crazy. I don't know why it's lagging right now. Oh man. Okay, I don't know why it's acting like this. So it's okay. I'm at the very end of class for real. So yeah, I can show you a lot of H patterns that didn't work out. So I just be always careful trading patterns, real talk. But this is the Bath and Body Works play I was telling y'all about. I ended up actually taking it. I went short after the rejection I told y'all about. I told y'all to we're looking for Bath and Body Works to reject this daily SIBI. Once I seen us reject it, and then the hourly did this. Yeah. So once I seen us reject it, we swept these highs. The hourly pushed down. I said I'm taking my shot at it. Like I don't think we rejecting this for no reason. And then Bath and Body Works is going very well for me. This is the hourly chart, so y'all can see that we were looking for Bath and Body Works to come to. I think this is a safe target. I'm most likely gonna hold past it, but I always tell y'all that the safe target is the lowest body on the weekly. Safe target. I mean, we're right there. Like obviously, money is already made, but I think it's gonna go lower though. Personally, I think we're gonna run these lows at $20-$25. you know, but I definitely took that play. Bath and Body Works, you know, worked out. I got direction from the monthly, but I broke that down on the previous watch list. Not that. What else I want to show? Intel, I think has a lot more down. Yo, y'all might not remember this from months ago when we were talking about Intel from over here, and we said I said I'm expecting Intel to make a huge drop. I wanted Intel to run out this whole section and come down to, what is this, $12 and change? Well, it's playing out. It took forever, right? It took forever because it consolidated a million years before dropping off, but it's playing out. We use this fair value gap. Look at it, monthly. We use the monthly fair value gap I was telling you about to run these lows. If we run these lows, I expect us to run the rest of the lows. So Intel, the move is not over. It's a monthly move. I still feel that there's more downside. I just would say be careful. As you can see, we're consolidating, but directionally it's hard for me to believe in anything to the upside. You know, even if we trade into this gap, it probably won't fill out the whole thing. It may touch the like first half of the gap before dropping off lower, but ultimately I think Intel will continue to the downside. So just directionally, I'm still bearish on Intel as an update. Nvidia I know is highly requested. Nvidia came to the weekly highest body, safe target, dropped off hard, invalidated the BISI we were looking at. Okay, well, that's bearish confirmation for me. If we were bullish, we would have used the upper half. If we were bullish, we would have used the upper half in that context. So same thing, Nvidia looking for these lows and potentially lower, but right now I'll just say I'm going for these lows at $90. Nvidia, OKTA, I thought it was a nice play I wanted to show briefly. Monthly SIBI rejection, I like this. I think we're gonna run under these lows. I'm aiming for this. Look, first of all, next target on OKTA is 65, first of all. On the weekly, I don't think it's gonna stop right there. I think it's gonna trade into this weekly bullish fair value gap. Just because it's a bullish fair value gap does not mean I think price is gonna do this. I'm just using it as a target. Now, every fair value gap is meant for call. And in this context, I would never look at this as something that's supposed to do this. In this context, no. But it is a place I might want to take profits on because we can react. Sometimes price will do this. I don't want to be a part of the reaction. I don't, you know. So, but I do think directionally is going there next. What would make me feel invalidated on that analysis is if we start trading deeply into this red candle from the previous week. We need, now that we left this consolidation, we need to leave it aggressively, like really drop off hard into these lows. You don't want to see too much of retracement. So that frames this gap, that kind of frames your analysis and say, I don't really want price coming to this gap. So you pretty much ignore that and you look at things down here and say, okay, well, this green candle could be something price could be repelled by. You got a bearish fair value gap right here as well. So like, I don't really want to see price invalidate this overall area for real before we come to this yellow line now. And so that's that. Man, okay. Let's see. That's OKTA. I feel like I'm done, right? That's the last thing besides SMH. Oh, and Tesla, highly requested. SMH and Tesla is literally the last ones, I promise you. So look, SMH. Same thing with AMD and NVIDIA. As y'all know, we looking at the bullish fair value gap from the weekly. It didn't work out. So what we think we doing? We're probably about to run these lows. Look at these engineered liquidity lows. But I told you I have a whole video on engineering liquidity on my YouTube. Scroll down a little bit, you'll see it. It's all about engineering liquidity. I don't think we engineered this for no reason. You got a failure swing. I'm expecting us to run through these lows and come into this monthly BISI as a minimum target. Like minimum, I think is going to like 184 minimum. We'll see. Tesla, I think Tesla has a chance of making it down to 175. I think I was looking at. I love what it's doing here. If we're bearish, if we are bearish, we should not be closing above this, right? If we're bearish, we should not close above these highs. Look what Tesla did, right? And then it came down hard like that. Yeah. You feel it? You see what I'm saying? When I see stuff like that, I'm like, yeah, it's still bearish. This is a nice retracement and the opportunity to hop in. We don't believe in moves that look like this, do we? We talk about this all the time. We don't believe in moves that look like that. I think Tesla has more downside. You want to see this fair value gap respected. On the 4 hour, you want to see this respected though. If we disrespect this, play is dead. Play is dead. Next destination for Tesla, super short term, it should be running those lows next. It should be running 202, but I think that it's gonna end up dropping off even lower. Like I said, macro I think is coming down to 175, but short term 202 should be next on the test. All right, but man, I done said a whole lot. Exhausted, and people. If you're watching this on YouTube, subscribe to the channel, like the video, go in the description right now, the description box, and you're gonna see a free Discord community that you can tap into. Updates all the time. It's a great environment. It's all about learning. It's no egos. It's real life. Just being here to get better. And it's something that you want to be a part of if you're serious about trading, and only if you're serious about trading. But with that being said, man, I got other links inside of the description as well for like different prop firms you want to hop into. But yeah, with that being said, man, that's all she wrote. I'll let y'all.